Good afternoon, everybody. Thank you for joining us on today's Festival of Enterprise live webinar. I've got Piers, Linney with me. Thanks for bearing with us. A couple of minutes late coming to you. We've got over 1,000 people, just under 1,000 people who've registered for this webinar. So just waiting for people to join. We've managed to get Piers's presentation. So those of you might know Piers Linney better as a former investor on Dragon's Den. He's also non-executive director of the British Business Bank. And he's here today to talk about the Coronavirus Business Interruption Loan Scheme and to answer any questions that you may have around that. So everything is live and good. So I'm going to hand over to Piers for an introduction from Piers, and then he's got a presentation that we'll talk through, and then we'll answer any questions that you all may have as well, because I know there's a lot of small, medium business owners on here, a lot of entrepreneurs on here who've got questions that they need to know. So without further ado, let me hand you over to Piers.
So Alex, you want to do questions as you go along, or are we going to do questions at the end, or what works best?
Yeah, I think if you talk through presentation, and then we can answer questions towards the end. We'll have time, I'm sure.
Okay, so what I've done, I've knocked together with my expert PowerPoint skills a few slides to give you a bit of background and context, and then we'll do a Q&A. I'm sure there's lots of questions. So if you can go to the presentation, Alex.
Sure.
Here we go. Right, so this is the Coronavirus Business Interruption Loan Scheme. It's a bit of an overview from me. So a few things first. I am at home social distancing. I'm making YouTube videos, and it's quite lonely. So if I can get just 10% of you to subscribe to my YouTube channel, it'll be worthwhile. So I'm doing some videos, it's now my man cave actually, / studio. So making videos based around, it's about life generally, but it also, I tend to relate it to business and trying to get through this in various different ways. There's my YouTube channel, so please do sign up. A little bit of news is, Alex, can you see all of this?
Yeah, it's all good.
So a bit of news is I've got a course called Startup with Piers Linney, which is a bit misleading. I say the course is more for anyone who's thinking of starting a business, anyone who's recently started a business, or even a small business that you want to grow. So essentially, I get asked a lot for, Piers, can I have a coffee and ask you questions? This is essentially having about 200 coffees with me and asking all the questions that I'm often asked. You can listen to it as a podcast. There's no sort of flashy graphics. It's basically me sitting at a desk talking to you. It's all video. There's 76 lessons, 10 hours. It was about 200 quid. But during this pandemic, I'm giving it away for free. So if you go to startup.pierslinney.com, and use that voucher code there, stay at home 100, you should see that for free. And if you're struggling, follow me on Twitter, social media, and there's actually a link there you can click on that takes you direct into the course with the discount. But the important thing is, do I have to say this? Stay at home. Personal thing is, my cousin actually is one of the UK's leading respiratory consultants for the NHS. So she's busy manning a COVID ward in Manchester. So it's not really about us and what we're doing. It's about affecting everyone around us, and people like my cousin. So insofar as you can, depending on what you do, stay at home. So let me give you some context. So the first thing to say is I'm not sitting here as a non-exec director officially for British Business Bank. I'm doing this with Alex and the Festival Enterprise in my personal capacity. So please don't try and be nice to me. So I want to give you some context. It's very important to understand how this works, where it comes from. That'll give you some understanding about how the scheme operates and whether it's applicable to you. So Cbils is a new scheme essentially, but it's been based on what was the Enterprise Finance Guarantee Scheme, EFG. This is a scheme which I'll kind of touch upon, but basically a very similar scheme. It didn't provide cover for interest or fees, and it was only a 75%, I say only, but it was only a 75% guarantee for the lenders. So it's slightly different. It's a bit more of a generous scheme. So the EFG has been parked for now, and Cbils has taken over. This is the scheme is delivered by British Business Bank, and you can look on my social media. There's a link to an article I wrote, and also on LinkedIn I wrote about Cbils. and about how this all fits together. British Business Bank is not actually a bank. It's not regulated. Essentially, it's a debt and equity fund which the government provides money to. It also operates the startup loans company. And then you can't go and ask the British Business Bank for loan directly. It just wouldn't work. What the bank does is use existing distribution channels. So things like lenders, banks, peer-to-peer lenders, challenger banks, invoice discounters, the whole range, venture capital funds, angel investment networks, the whole range. And it's facilitated about 12 billion of finance for SMEs since its inception. So what British Business Bank does is deliver Cbils through existing and accredited, important to say, lenders and partners. And currently there's 40 of them. And again, all through this, if you want to go to the British Business Bank website, you'll see at the top there's a script, which is a link to their microsite for Cbils. And a lot of this information I'm going to go through is there. In fact, all of it's there and even more. It's important you do that. So the bank's got 40 accredited lenders. What that means is that because the EFG framework existed and you had these 40 accredited lenders, it means that nothing's perfect, but I can tell you right now, having seen the action behind the scenes, that people in Treasury and Bays and British Business Bank have literally been working all around the clock and over the weekend to put this together. And some of you might find it frustrating. It might be applicable to you because I know it's a very difficult time. I'm involved in businesses that are struggling. I've got friends ringing me and asking for advice. So it's a difficult time. And the key thing is, this is what I say in my article that I wrote, which you can see on LinkedIn, is that you need to understand your options and be realistic about what's applicable. And if it's not, there's no point in bleating about it on Twitter. It's about actually, you've got to take stock and take action. And some of those actions can be very, very difficult. But what I'm going to try and do in this webinar is take you through and answer questions about, is this scheme right for you? And if it's not, you need to move on. But if it is, it can make a big difference between accessing the cash you need to trade on and not. Now, lots of other schemes, which I'm sure you may be already aware of, things to help you pay employees. There's a rate relief and various other schemes out there. They're available on the government website. Again, you follow me on social media, especially Twitter. I've become quite active there recently, and my YouTube channel. There's a lot of information there about that. And the important thing is to remember as you go through this, and I'm going to do a chart on the next page that explains the legal structure, is that it's the lenders, it's the banks and these accredited lenders that actually lend the money to small businesses. And they have policies, they have credit departments, they have credit approvals, risk committees, all the usual stuff. They have their standard lending criteria. I'll explain, what's relevant to you and what may not be. I'll also talk a bit about personal guarantees because I've had a bit of a conversation on Twitter about that, and some of it was a little bit confusing for me. So I've reached back to the British Business Bank and got some clarity on that. So I'm going to go through the features, eligibility, and the applicability, and then let's take some questions. So forgive my PowerPoint in the last half an hour, but this is the structure. So you've got the government, and the government essentially is us. This is circular. Essentially, it's us. It's taxpayers. That's where the money's coming from at the end of the day. So we, the government, own 100% of British Business Bank. And when I sit in board meetings, the government shareholder has a representative sitting there. So it owns the bank. And what it does is it set up the bank after the last credit crunch. And the idea was that there was equity, there was debt. The banks kind of sort of retreated from providing loans. They probably shouldn't have been providing anyway. The equity dried up and a big gap appeared. And what British Business Bank has done is try to, insofar as possible, not always possible, is to try and bridge that gap by providing equity into the market, things like the Northern Powers Investment Fund, the Midlands and Engine Investment Fund. That's British Business Bank money. It also provides financing to debt funds, to peer-to-peer lenders like Funding Circle. And it's trying to close that gap. Now, you can't always close it, but it's facilitated over 12 billion to try and do that. But the point is, and you need to understand this, and I'm an ex-corporate financier, is that somewhere someone's got to take the risk, the equity risk or the debt risk. And I was on Twitter recently having a bit of a conversation with some people saying that when I go through this and you think, it doesn't work for me, I haven't got the cash flows, I'm loss making, it's not applicable. You have to ask yourself, even with an 80% guarantee, would you lend your money in this situation if it was your cash? You still lose 20%, and you're still going to have some criteria, and you're still going to think about it yourself. This is not a scheme that's trying to hand out grants or free money. Anyone that borrows off these lenders is going to be 100% liable for the loan. It's the lender that gets the guarantee, not the small business. So what British Business Bank does then is created this network of 40 accredited lenders, and this is purely relating to Cbils. It's got lots of other delivery partners for equity and other things. So there's 40 of them. If your bank or your whoever it might be, could be an invoice discounting partner, isn't on the scheme, they can sign up. It's going to take time, and I know that in this situation, time is money. Time is everything. Meeting payroll this month or next month, it really matters, and these things can take time. So this is my personal opinion. Trying to get your bank or invoice discounting house, whatever it might be, to sign up on the scheme and get the processes going, it's probably going to take too long. If you're really serious and you think this applies to you, you're probably going to have to go and approach one of the existing lenders and have a conversation with them. And even then, there's going to be a process and some due diligence and going for your financial model and your business plan. It takes time. So in terms of expediting that, my personal advice is to go and talk to people that are already up and running, have the processes in place, and have some history of actually delivering these kind of loans. And then these lenders here, they lend, you see there at the bottom, to small businesses. So that's a legal structure to provide a bit of context. So these are the features of the scheme, the main features. You've probably read these already. So there's 1.2 billion of government-backed lending, and people say, well, it should be more. Who knows? This is a moving target. This has been done very quickly. If there's huge demand for this and the banks are playing ball and putting the money to work, that number could go up. I don't know. But right now, it's a reasonably large amount of cash that's being put to work and made available pretty quickly. So you can raise up to 5 million. It was smaller under EFG. During the pandemic, it's now 5 million, which is a sizable loan. I'm sure most of you watching this and listening to me, you don't need 5 million quid. That's quite a big business. You're going to need to repay that and then service the debt, the cash flow, and the repayments. But it does go up to 5 million. So it depends on, again, each lender will have their own criteria in terms of the size of loans they're willing to deploy, because sometimes, there's a lot of paperwork for them too. But that's a reasonably large amount of cash. This applies to a range of different financial products as well. It doesn't just have to be a term loan. This applies to invoice discounting, overdraft. So again, when you talk to those accredited partners, you've got to think about what product is best for your business. Which product has got the least path of resistance for you getting that money? If you think you need a 500 grand loan or 50 grand loan, do you need 500 grand or 50 grand? Can you trade through and make some very difficult changes, perhaps, with 300 grand or 30 grand? So you've got to, in some ways, sort of augment and think about your financing strategy and try and reduce the barriers to obtaining that finance. So each lender will have its own products. There are lenders doing different things, and even lenders with term loans, there are lots of different structures in terms of capital repayments, capital payment holidays, the interest rate, how that's calculated. So look at, don't just go and talk to one of these accredited lenders, look at their website, go and look at a few of them and try and work out what's applicable. Maybe look at one of the big ones, like a big high street bank, and maybe one of the smaller players that's come into the market more recently. I'll give you a better view of what the market looks like. So the key thing here is what the government is doing through British Business Bank is guaranteeing to these lenders that if they deploy capital under Cbils, they're guaranteeing that they can only lose 80% of the outstanding amount, the principal of the loan. Now, over time, if you're repaying the loan, it will go down. There's 80% of what it is at the time that the SME, the small business, defaults. It's not obviously 80% of what the loan was at the start. So it's this is a massive guarantee. And the idea again is to try and close that gap by reducing the risk for banks so they can put more capital to work than they normally would do. Now I'll come on to it at the bottom, but if a bank feels as though your business is strong enough and can trade through and doesn't need a guarantee, then it doesn't actually qualify for the scheme, and it won't be able to use the Cbils program. What they've done is here, this 80% guarantee is also, they've added that there's no fees for SMEs. There was a small fee, and there's a huge amount of detail that I will not go into about how you structure these things, and governments and state aid, and there's lots of reasons why they have to charge, for example, small fees to the banks, and I think that's been reduced as well. But any fees that the banks levy on the small business and the interest in the first 12 months will be covered by the government. So that's partly where this 1.2 billion is going to. So essentially, to keep it simple, because I know some of this is a lot of information, is that think about it, in the first year, there's no interest payments and you're not paying any fees to banks. So again, you're looking at the each lender's structure and the term sheet you may get out of them, and look at what is your impact on your cash flow over the next 6, 12, even 18 months, because as we all know, with this COVID-19 pandemic, the issue is right now we don't know where the crest of the wave is. Once you can see over it, it makes you start planning, because you know what the world may look like. Right now we don't really know how big this hump is. So think about that very carefully. But when you're structuring a loan, what you want to do is minimize the cash going out the door. So that might be asked for a government's covering of interest for 12 months. Great, happy days. But you might want to have a conversation with the lender when you structure the loan about a capital repayment holiday as well. And that reduces the cash going out the door, so you can use it to continue trading. Hope that's clear. I'm not going too quickly. Now, quick one, these loans can be up to 6 years. They can be a bit less, up to 3 years if it's invoice discount or an overdraft. So it's a reasonable amount of time. And again, I'm a former corporate financier. I don't want to bore you with all the detail. But again, when you're looking at repaying a loan and you're in difficulty, there's a trade-off between, the COVID-19 pandemic. Let's just say you need 12 months to really to right the ship and get things motoring again. So you want to push out really capital repayments and fees as far as you can for at least 12 months. The government's helping with the interest being covered, but you can push it out further. The only issue is that your loan has a term. So the more you push out these payments, the more pressure you've got in the last few years to actually service that debt. So you've got to be careful that you're not, trying to be too clever and causing yourself a problem down the line that's, could put you in even a more difficult situation. So think about that when you're structuring the business. Security. So the lenders can issue loans with no security, so unsecured debt, as long as it's under £250,000. That's at their discretion. Now, they're still going to be worried about losing their 20%. That's what they do, the commercial organisations, but 250 grand can be unsecured. Over that, they may well look for some kind of security. And I know you're all thinking about, personal guarantees. I'm going to come back to that in the next slide, or 1 or 2 slides away. And you've got to remember that Cbils, I put sued here, that's how quick I was doing the slide. Cbils cannot be used, maybe that's a Freudian slip. Cbils cannot be used if a lender can provide finance on normal commercial terms. That's just if your business can support the debt, then you should take it on normal commercial terms. So eligibility. So most businesses, small businesses, are going to be eligible for this scheme in terms of on paper. The eligibility and the applicability and the application process is probably going to be more of a hurdle. So it's based for UK-based businesses. This is also a big point. It does apply to sole traders and freelancers. Now, if you became a sole trader, last week, and you were freelance, you started a couple of months ago, and you've got no track record or accounts, or you haven't paid tax yet, you're going to find it difficult to evidence that you have a track record or the necessary cash flow to service a loan. But it does apply to sole traders and freelancers. You need to have a plan and have that history and have it ready. And the other thing I'll just throw in is that when you're thinking about, and this is in my course actually, which is free, so you can go and look at the section on raising finance. The key is, and a lot of small businesses, especially when you're in a panic, you've never done this before, you never borrowed money, is you don't get your ducks in a row. So when somebody says to you, here's an application form, send me your business plan, send me your financial model, you haven't got it. So you start to build bridges to cross chasms. If you're going to go down this road of raising any kind of finance, get your ducks in a row. And if you if you struggle with that kind of thing, then find somebody. Lots of people at home that want to help at the moment. Find somebody that can help you put together, or at least fill out the application form as sensibly as possible, because that again is going to reduce the barriers and maximize your chances of raising finance. And this is the point here. You need to have a viable borrowing proposal. There is no point going to a bank saying, look, I started my business last week. I reckon next year I'm going to do £10 million, and the year after that I'm probably going to buy Amazon for cash. You're wasting your time. You need a business plan that actually is realistic. There's no point hiding the fact that the world's going to be upside down for maybe 3, 6, even 12 months. No point hiding the fact there's going to be a recession. So you've got to say to these, and I'm an ex, fund manager as well. You've got to be able to say to them, look, here is a realistic plan. They're going to do due diligence. They're going to sort of sense test your financials, both in terms of revenue and the costs. So no point trying to hide stuff, because these are professionals and they're going to find out. And the minute that anyone who you're trying to raise money from begins to think that you're trying to pull the wool over their eyes, they just shut the briefcase and go home. So try and create a really credible plan, also a plan that you believe in. There's no point having a plan that you're going to spend the next 3 years, even if it's a 6-year loan, working 18 hours a day if it doesn't hold water. So think about that carefully. Again, it's a balance. You want to show a plan that maximize the chances of raising finance as well, but you get it. There's a balance to be had there. Now, each lender will have its own lending criteria. I don't know what they are. There's 40 of them. They're all going to be different. So you need to understand the process, the application process, but also understand what are their criteria. There's no point again going through the process and doing all this work if you can't tick all the boxes, because typically, the lending and debt, it can be quite a box ticking process. If you can't tick all the boxes, you probably again wasting your time. So you've got to be able to satisfy their credit approval process and their due diligence process. And due diligence is looking at your business from a legal standpoint, a financial standpoint, and a commercial standpoint as well, and taking into account the state of the world and your business. Now, big one, personal guarantees. So this is probably a different webinar about personal guarantees, but personal guarantees are what, so British Business Bank does research every year about the small business finance markets research, and the research shows that 73% of UK small businesses would rather forego a growth opportunity in their business than borrow money. Now, in some cases, there might be good reason for that, but that reticence is something that is in many ways holds businesses back. And I think personally, I've been there myself, is that, the fact you often get asked for a personal guarantee scares people off. Now, I'm not going to go into huge detail about personal guarantees, but personal guarantees are, it's based essentially you providing the bank a guarantee that if your business, obviously a limited company, it's got limited liability to the assets that are in that business, the net assets. If that company, that business can't repay this loan, they can come after you. And that's quite often what happens. Happens to lots of people I know, and it can be quite scary. Now, I'm not going to give financial advice. This is just my personal opinion. If you've got a house worth £250,000 and you've got a £10,000 left on your mortgage, and you want to provide a personal guarantee of £10,000, there's less risk. The point about these things is when it's your principal dwelling, your home, and you have no other assets, really, liquid assets, you can use to repay that debt. Quite often you'll find that your home, whether you like it or not, but it's quite a small debt, compared to the value of that property, means that you could lose it. And that's what scares entrepreneurs. Now, the good news is that under the Cbils scheme, lenders cannot require you to give security over your principal dwelling, your home. That's not allowed. If you've got another home in the Cotswolds, look at you, they can take a security over that. But at the end of the day, you've got to say to yourself, if I'm asking someone to lend me money in my business, and I've got these sort of assets that I don't really need, let's face it, what's the trade-off again? Should they be able to take security over those things? Again, ask yourself, what would you do if you were a lender? So your home cannot feature in a personal guarantee in terms of security. Now, what the lenders can do, though, is say, I'll give you a loan under Cbils, I can't take security over your home. And I might give you some other financial product where we'll take security over your home, which doesn't use a Cbils scheme. So you've got to be very, very careful there about whether you're willing to give a personal guarantee, whether you can afford to give a personal guarantee, has an impact financially, but also on you and your family, and also where it fits in. So think about that very, very carefully. But the scheme, on the face of it, Cbils schemes, they can take security over other assets. So if you've got a home that's got some equity in it, you've got a second-hand car collection or a drawer full of diamonds, lucky you again, probably shouldn't be borrowing money, but they can take security over that. So those assets, they can take security over. And just so you understand, the 80% guarantee that British Business Bank via the government provides to the lenders is an 80% guarantee after they've tried their best in the usual ways to recover the outstanding loan after a default. So if they find that you owe £100,000, they've got a guarantee, they can't go off to your house, you've got other liquid assets or even illiquid assets, they take those, they then manage to raise £50,000 from that, they've lost £50,000, they can call on the guarantee to get 80% of that back. But you'll see when you read the information from the banks and the lenders that they quite clearly state that they will come after you, for want of a better term, to recover the loan. And again, they're commercial organisations. They can still lose 20%. Hope that was clear. I'm sure we'll get into conversation about personal guarantees. So I've covered some of this already. This is applicability. So applicability really is what it says in the tin. Does this really apply to your business? It's a loan scheme. You remain 100% liable for repayment of the loan, or the business does. You may end up liable for some of that if you're given some kind of personal guarantee. You require cash flow to service capital and eventually the interest after the 12-month interest holiday the government is funding. Lenders can still lose money. This is not a free opportunity for them to put money at work, and the government's giving them a 100% guarantee. That'd be quite a different structure. It can be, let's face it, it can be quite difficult to, perhaps when you start thinking about it, come up with a plan that shows your business. And then this is the difficulty in this that I had a discussion with. You may have a business that's doing quite well, struggling a bit, needs some capital anyway. Now you've got a real problem. You need to raise some money. But you've got to then show to a lender that I think I can trade through this, the loan you're going to give me, right the ship, and then grow the business after that and service and repay the debt with some headroom, because they don't want it to be particularly tight. And that again is a trade-off between the reality of your situation and a plan you can actually write down on paper that you believe in, as well as being able to present that to a lender. And it's going to be interesting to see whether it's larger SMEs that have got more of a trading history that are struggling. They're sort of down here now, and they're the ones that can access this. And the very small companies that don't have the trading history, don't have the assets backing, don't have the ability to give some kind of personal guarantee, don't have that kind of cash flow history, whether they're going to be able to raise finance this way. So that remains to be seen. I'm going to keep close eye myself on what happens in the market and the volumes. And I've heard sort of anecdotal feedback that people are approaching banks and they're not hearing what they want to hear. I think there's an expectation gap. I think that people think, I'm struggling, I've got a payroll, my business is going to go out of business, I've spent 10 years building this, I need capital. The banks are saying, well, yes, we can deploy it if you've got a business plan and we've got some kind of guarantee, but I still want to get the money back. And I think that some people I've spoken to think this is some kind of the government just basically underwriting small businesses. It's not quite what it is. It's kind of on the way there, but that's not quite what this scheme is. So you need to think about that. It's not free money. This is not going to apply for loss-making businesses. Businesses that think they may make a profit next year, probably, unless you've got a really strong contractual evidence that revenue is going to come through the door. And you've got to be realistic about that and your potential of securing this kind of finance. And the last thing is get out there and talk to people. So go and talk to some of these accredited lenders. Be realistic. Talk to the big ones, the small ones, maybe 3 of them across a different market. Cover the market. Get an understanding of whether this is applicable to your business, whether it's something you even want to bother with, to be quite frank, because it is a process and these things take time. And I think that's it in terms of slides. So Alex, if we just flip back to you, maybe you've got some questions and we'll take Q&A.
Yeah, I will put yourself on the screen, Piers, and I will bring up a whole bunch of live stream questions on the right hand side, and people have been posting up questions here as well. So I'll whistle through them, and those you can answer, Piers, awesome. Those that you can't, then we can just move on. Not everything's going to be applicable here.
And just say one thing. So I'm an ex-venture capital lawyer, corporate financier, and if I use jargon sometimes, I don't think about it. Feel free, don't be embarrassed, just ask, what the hell are you talking about? What does it mean? What does that mean?
Cool. So I will start at the beginning, which makes complete sense. So we pay no business rates. We are a small business. I understand that we may be eligible for a one-off grant of £10,000. Would we still be able to claim for business interruption?
I don't know the answer to that question, to be quite frank. There's been another question about, can you apply to the job protection scheme and Cbils? I don't know whether they're mutually exclusive or not. That's something you have to go and have a look at. If you look at the .gov website with the list of the different schemes, so I don't really want to say yes or no, because I don't know, and there's no point me pretending that I do know.
Okay, no, absolutely. Those are the ones we can move on. We have contacted our bank and different lenders, and they don't have a process in place to unlock the government grants. Is there a confirmed timeline for business to have access to government support?
So the scheme is available now. It was available from Monday, after people working all over the weekend, all hours to get it up and running. So it's there. There'll be some lenders that are maybe the larger ones that are good to go. I've already seen microsites or PDFs from various banks sent to people that I know about how they're going to operate the scheme. So they're the ones that are in the market already. And again, my personal view is that I would talk to, I guess speed is important here. So talk to the already existing accredited lenders and partners, as opposed to perhaps trying to cajole your bank to sign up to the scheme. Now they can do. This is not going to go away overnight, but if your business needs money to cover, payroll in 1 month or 2 months, a 2-month application process plus another for them and then another month for you, it just isn't going to work. So to expedite the process, go and talk to, and don't talk to one of them, go and talk to a few of the accredited lenders and get your ducks in a row. Don't go and talk to them and they ask you a question. Well, what's your objective for next year? You go, I don't know. I'll go away and come back and I'll work on that. Get your ducks in a row, have a plan, have some financials, have a story. That's what business is about quite often. Have your track record, have the history, and put it somewhere in a folder, whether it's a physical one or a virtual one, and take it with you or have it ready to send so that you maximize the chance of success and make it as fast as possible, because speed is of the essence.
It is 100%. We are 3 directors and shareholders of a limited company whose marketplace is completely closed now. There are no other employees and there are no premises attracting business rates. To access financial support, are we employees or are we considered self-employed? So maybe with your legal head on this time instead of your banking head.
Well, yeah, so it depends how you structure the business. So so the government is working on schemes for self-employed, and this is really difficult. So it's obviously really easy, again, personally, it's very easy for the government or to say, look, we're going to support people on PAYE because they know you're getting paid, the information exists. If you are yourselves on PAYE in your business, then that perhaps applies to that. It's 80% because you are an employee at the end of the day, and there's a history of paying them out. Whether you're a director or shareholder or not, you're an employee. If you have tended not to pay yourself in PAYE and you're taking dividends, now it depends whether it's a limited company, it's an income, or whether you're a sole trader, then that's where it gets complicated. I think that's what the government are busy working on, trying to distinguish between how they support people on PAYE, entrepreneurs that have earned money through dividends from profits, or those that have taken out who are just sole traders. So something you need to keep watch on. I was reading something today actually about it. It's something they're busy working on. So I think quite a frustration of this is you want it to happen all at once, but these are super, super complicated things that the government needs to get their act together. And it's not just about putting an announcement out. what they're trying to do clearly is work out ways of actually delivering and getting that cash back to you.
Yeah, and it's never happened before, has it? So just trying to do.
Well, my response is though is look at your legal structure. Your directors, doesn't really matter to be honest with you. Your employees, you're on PAYE. So where's the support for that? Are you then taking that money as dividends because you don't take it out as PAYE? I think that actually is going to be the most complicated scenario, because then what is that dividend? Is it income, or is it investment income, or is it income to pay your bills? What is it? I think that's something that the government's struggling with, but I'm sure they'll come up with a solution, given that I think it's 73% of UK SMEs have one employee. The owner manager is one person. So they've got to do something there, because that you took about millions, 4.3 million people.
Yeah. This seems a popular one here from GK, a few people asking. In regards to loss-making businesses, we've been trading for 3 years. However, the business is driving more revenue each year with declining losses each year. As per our accounts, only 10,000 lost last year on Companies House. Would we still not be eligible for Cbils?
I'm not a accredited lender, but I think you're wasting your time. That's the hard reality, and I'm going to give you the hard realities. If you've got a loss-making business, a tech startup, a company that it might make money in a year's time, you might be able to show contracts. I think you're going to struggle to get a lender, bank, to extend a loan to you, whether they've got Cbils or not, because as far as they're concerned, that's very, very high risk, and they can still lose 20%. So it's something you don't want to hear, but again, my advice is, and we're going to do another webinar tomorrow, I think, about crisis management, is, understand your options, go through them, tick them off, and if they don't work, just move on. And you may find yourself, you go through a list and there's nothing in the bottom of it, and that's there's things you can do there as well in terms of protecting your livelihood. But there's no point wasting your time chasing these things down rabbit holes, because I just don't think it applies to you.
Yeah, it might be the same as like Neil's post.
I know it doesn't apply to you. You may find a kindly country bank manager that doesn't exist anymore that's going to give you a loan. That it is IT systems now running credit reports, and your business plan does matter. But I can't see a company that hasn't turned a profit yet being able to raise money in this way.
Yeah, and you're probably going to apply this one to Neil, saying we've gone through the process of developing AI software and are now at the point of commercialization, and this is where we now see the shortfall as the original
tech
investor. Yeah, exactly.
Tech. I do a lot of tech. I'm involved in tech companies. Tech's going to have a nightmare, because at the end of the day, they're small businesses that can be startups. They employ a lot of people. They have quite a huge amount of cost and very little revenue. And they're the ones that are at greatest risk. One of the biggest risks of this pandemic is losing our innovators. So again, this is a different webinar. I wrote an article about it. Have a look at my LinkedIn or social media. Equity is your only way out there, really. And raising equity is very, very difficult. If you already have shareholders, then there's no, and I've been there, I've done this myself, right? There's no point sticking your head in the sand, hoping it's going to go away, or seeing what's going to happen next week. If you're a shareholder in a small business, you're probably worried about your own portfolio, be it liquid or stocks and shares or not. And you're going to be expecting anyone who's invested in to have a problem, especially if you know they're a tech company or someone that's has a business plan that expects to lose money for a period of time before it starts to make money. So they're expecting a call. So make those calls, have the conversations, and just see if you can structure some kind of financial package with those individuals who might be angel investors, might be friends and family. I don't know who they are. That access to capital, or maybe you push the pricing out for a period of time. So you may be a convertible loan. So you say convertible loans where you say, give me the money today. Clearly, it's not like a bank loan, because they kind of know you can't service that loan if you're not making profits. But the idea is that down the line, you raise more equity funding, and then they have a choice. They either keep the loan, getting paid interest over time, maybe the capital, or they convert the loan to equity at the valuation at that time. Another one is advanced subscription agreements. This is something that's been used quite a lot by the crowdfunding platforms. And that's where you say to somebody, right, you invest in the company today, and this is where you can use EAS, and it was 12 months. I'm going to put it back to 6 months. Maybe I need to extend it again. You say that in 6 months, it's 6 months now, we'll raise some more money when the dust is settled on this pandemic. We'll set a new valuation, and you then invest at a discount to that valuation. It's a bit like a convertible loan, but it's not a convertible loan. It's not a loan. It's actually just delaying the day in which the equity goes in. And if it's within a 6 month period, then they're still eligible for EIS. So on the equity side, you have to be creative, but Cbils just does not work for that kind of business.
Yeah, and I think you probably know the answer to this one as well. We're a startup business. We're meant to launch next week. However, our manufacturing is now stopped. Investor has pulled out. Until the product is ready, will we be eligible for the loan? Unfortunately, we can't apply for a grant.
No, I don't know how big it is, I don't know how chunky your business is, the idea, but what is still available is the startup loans. The startup loans is
correct.
Webinar on that. Startup loans is, and Alex is the expert, he knows more about this than I do. He used to be a startup loans delivery partner. But startup loans is up to £25,000. It's a personal loan, but if it's, I guess, 4 of you now. It's 4 of you now after the 7 brothers all raised 25k each, I think, for their their brewery business. But I think it's 4 of you can raise 25k each, so it's a reasonable amount of money to start a business. So don't forget startup loans company. And again, my advice again is, and I say this a lot in my course, which you can go and access, is keep the conversations going. Don't just put your head in your hands and just go quiet for 6 months. If you think you had a business that held water and there's an investor that was interested, yes, the wheels are going to fall off for 1, 2, 3, 6 months even, but the world will come back. The shit will be righted. There will be opportunities out there, and in some ways, mothballing your startup before you started it up right now potentially wasn't a bad thing. It would have been a lot worse if you'd raised the finance, started spending it. This happened, and you ran out of cash, and then you don't have a startup. So, I'm the eternal optimist. So think about that, but keep talking to the partners, the investors, and whoever the stakeholders were.
Yeah, mentioning startup loans as Piers did there, we've actually got startup loans coming on a webinar next week, which I'll be hosting. As Piers said, I was delivery partner for startup loans for a number of years, so we've got them on, and that could be really relevant to a lot of you as well if you've been trading up to 3 years, basically. I did
a video yesterday, plugging my YouTube channel, about reassessing things. So who knows? You may be in a business that I hate to say this, isn't going to make it, and you'd have to sort of face up to that fact and try and get out of that without losing your shirt as much as possible, and looking after your employees and your creditors and customer, all that good stuff. But you might be an opportunity to think, right, okay, well, we are where we are. That's what I look at things. Should I start a new business with what I've learned? And the point is, this is what my course tries to do, is that serial entrepreneurs are serial entrepreneurs because they have learned along the way how to execute things more efficiently. And you may find now that even with this experience, and I raised money for .com right in March 2000, £700,000, and the world fell to pieces. I think it was March 2000 or April at least at best. So I've been through this in terms of the wheels are spinning off in all directions. But what came out of that is experience, and that experience as entrepreneurs, especially if you've got a small business, a startup as opposed to an operating small company that's been going for a while. This is where you learn, and you will learn something. I don't know quite what. I can't say what it is, but you will look back on this and think, you learned a few things.
Yeah, just to check, Piers, do you have any more time? Have you got another appointment?
I've got nowhere to go. I'm staying at home.
You're in your man cave.
I'm going to put the kettle on, but I'm quite happy to stay. As long as
okay, cool. If you need to go to a toilet break, because we still got hundreds and hundreds.
I'll make sure my mic's off.
Yeah, I'll just the questions that have been asked, because we're up to hundreds of questions now, but I'll try and pick.
There's one there. I think Thor, THORE. So sole traders and freelancers can apply to Cbils, but as I said earlier, you've got to make sure you've got that track record. You can show through accounts or your tax returns what you've been earning. There's no point if you're a sole trader or freelancer that set up shop a month ago. That's just not going to work. You know, when you're lending somebody money, always think of mortgages. You know, any financial product really, like a mortgage, is when you're buying a house, and some of you would have done this. The mortgage company says, right, I want to know you've got a job, and I want you to prove to me that you've been earning that money for the last 1, 2, 3, 4 years, whatever it is. And I'm only going to lend you, 4 times what you earn. That gives them some comfort that you can actually service and pay the repayments every month. And I want you to put some equity in, because that reduces their risk. That means that, if you buy a house for £100,000 and you put in £30,000, they lend you 70. It's got to go down to £70,000 before they start losing money. That's their security. They take security over the assets, so if things do go wrong, they can take it off you. And loans are the same in many ways. Lenders want security in terms of assets, personal guarantees. And if you haven't got that, they want security that you've got the cash flows to service the interest and repay the debt over the period of time you've agreed. That's what debt is. And if you get your head around that, you'll realize very quickly that, this expectation gap, I often see people suffering from, you'll know exactly why it's there, whether it's even worse going down that road. But I'm going to be putting out, videos whenever I can about all these issues, and I'll probably do one about equity as well.
Okay, we're a small brewery operating across 2 sites, production and retail at one site, warehousing and retail at the other, with approximately 20 full-time employees. We are still producing for future confirmed orders and retailing takeaway and deliveries, but cash flow will become an issue as the government took away most of our trade when pubs shut. It's going to affect a lot of people, obviously. The directors will not sign personal guarantees, so how can we access the scheme, or what other alternatives would you possibly suggest, Justin?
So you are, I don't know your numbers and your financials, but you are the kind of atypical business, I think, that this is designed for. So if you're a very young business, very small business, and you can't show you've got a plan or cash flows or customers, and the world's become quite complicated, it might be hard to raise money. If you've got customers, you've got a brand, you've got a business, you've got cash flow, you've got a history, then you've got more chance of persuading a lender to provide you with capital. Now, again, this is crisis management. So you've got the other point I should make is that several schemes probably apply to you. Now, I don't know, sitting right here, I need to find this out actually, whether you can double dip, whether you can, I think you can actually, get a rates relief. You can apply to Cbils. You can also apply, I think, to get the POE to support your employment and employees. So I don't know if we can double dip in all of these things, but you need to work out, do a couple of things. One is go through, so start with revenue. Is there any way in which you can create revenues? And it's very, very difficult. It's very difficult deliveries. Is there something you can do which might even have to go down the line, bring your business more into the the sort of the generation that buys things without leaving their sofa, because people are now sat on their sofas. Can you get your product to them? So think about revenues. What can you do to be creative? And that might actually, annoyingly, mean you need a little bit of investment to make that happen. But that might be something you actually go away and think about and strategize about. It might be something you continue on the business. It might be something you never thought about before. But lots of companies I'm seeing in the news, they're augmenting their businesses. They're turning their shop into an online business with a delivery capability. Again, that can be hard. Now, the main thing you can do, that's quite hard to control. What you can control is your cost base. So clearly, look after your stakeholders, especially your customers. Communicate with them as far as you can, especially on social media. If you've got some kind of direct email list, whatever it might be, look after employees to the extent you can as well. Use the government schemes to try and protect the employees. You've still got to find that 20%, and that might be too much for lots of companies as well. You might have to make some very difficult decisions. But the point is, and I say this, is literally get your management accounts out, and then you should have a line in there for every single cost, and go through them and say, what can you do about every single line? Can you turn it off? Can you reduce it? Can you renegotiate it? Can you push the payment out for a period of time? Have those discussions now. Don't just stick your head in the sand. So literally go for every single line. And at the end of that, when you've done that and you've worked out, can you do anything with the revenue? Then you know what the hole is. Once you know what the hole is, then you can really start to look at what your financing options are. And, yes, it sounds like you can apply for Cbils as long as whether the banks will want personal guarantees, I don't know. At the end of the day, most people's main asset is their home, or at least the equity in their home. So you've got to ask yourself, if you give personal guarantees, what security are you giving it over? Can you negotiate that? Can you make it very specific of a particular asset or a car or something you can live without? I don't know what your personal situation is, but think about it, because this is really, really difficult time, and it kind of, I've heard so many stories and talked to people about their businesses, and it is heartbreaking. But the point is, the world, it will come back. And if you can, and you spent time building a business, and I'm going to teach you all to suck eggs here, but try and, if you can, keep that business going. You have to mothball it, look after your talent, let some people go, let down some people that want payments right now, but try and maybe pay them in the future. Do what you can to maintain your business, because when the world does come back, you'll find that there's opportunity. There'll be a recession. You might think about that. There's probably going to be less competition as well, being honest about it. A lot of companies aren't going to make it. So your business sounds like the kind of one that this scheme is probably best suited to.
Some loads of really thankful comments on here, just to let you know as well, Piers. Thank you for the advice. Asking.
There's a good one there about the banks. How long will it take?
I was going to ask you that one. Yeah.
Harshida. So I don't know. They're all individual organisations. Some will be slick, some won't be. Some are well established, some aren't. Now, I know from conversations that have been had with banks by government and various other industry organisations, that the banks are saying that they want to help. Now, they're commercial entities, they don't want to lose money, but if they expedite these applications, you're probably still looking at a month. That's the reality. It will not happen in a week. It will not happen in 2 weeks. If you're lucky, 3 weeks, month maybe. Anything after that, it's, for them concerned, they're taking too long. That's the reality.
And here's one I think that, again, is bound to apply to a lot of people. We've been highly profitable for 3 years, built our personal finance, but our personal finance debt is a mess. Nothing huge, but we Cbils be more gentle on personal credit scores. Probably know the answer to that, but
yeah, I've been there as well.
Yeah.
I tell you one thing. I don't know what the credit reference agency are going to do, because everyone's going to have everyone's credit score is going to be in the toilet.
Yeah, exactly.
Whether it's a moratorium or not, but I mean, credit scores are very quickly, let's face it, going to be meaningless. So again, talk to people. Go and talk to a couple of these lenders. Your business sounds like it's one that this applies to. It's perfect. Try and avoid personal liability if you can, but at the end of the day, listen, I've been a fund manager. I've sat on every side of this table. So I have people that come in and say, look, give me your money and I'm going to make you a fortune in equity. Or don't worry, I'm going to repay your interest and I'm going to repay the capital in 2, 3, 4, 5 years, because my business is amazing. And you say, okay, absolutely fine. If you're so confident, committing security over your property. Oh, hang on a minute, and you've got to put yourself sometimes in the lender or the investor's shoes. And if you're super confident, telling this amazing story, then why would it bother you giving security over something? I'm not saying give security over your house and personal development. My computer seems to be dying here. I'm not saying give security over your home or anything like that, but do think about where the lender is coming from and what you can do to kind of bridge that gap in terms of what are you willing to give away, give up, or give to get over the line. I hear so often people say, no, PGs, and my personal opinion is avoid them if you can. You shouldn't really, and again, it depends. If you're single and you've got a property and you've got no real obligations in life and you've got 100 grand of equity in it, you need to give a PG for 20 grand to get your business over this. And you think it's a business that is going to really produce profits and support you and the family of the future in the future. You've got to think about the risk you're taking.
Yeah.
If you've got a very large family, lots of obligations, and maybe a previous family as well, and people, and your equity in the house, you've already soaked it up, you've been remortgaged your house, invested in the business. You think very, very long and hard about giving personal guarantees. But it's a very personal thing. and it's something you should take advice about, not from me particularly.
My client's payday is this Friday. Are they required to pay salary to his staff or wait for the 80% by the government? I think it's clearly they've got an obligation, depending on their T's and C's in their contracts, to pay their salaries. Would you say?
Yeah. So again, that's something I was looking at. I'll mention the name. One of our last pub owners was having this debate with the media. I think you need to find out when that is payable, but I don't know the date. I don't know the date on which it kicks in, and what salaries are actually covered from which date. I don't know the answer to that, but it will be out there. But the point is, if you possibly can, wait, because the other thing is, there's nothing worse, and I've been there as well, is having to let, and I'll use a generic term, talent go. These are people you've spent, years in some cases trying to, find, train, work with. They fit your culture, they know your products, they know your customers, and if you possibly can, you try and keep them.
I think that's great advice, and just having hosted 250, 300 entrepreneurs on my own podcast, the number one thing that everybody says time and again, whether it's a Ray Kelvin at Ted Baker or a Holly Tucker at Not on the High Street, hiring people and keeping that talent is the hardest thing in the world. So as you say, Piers, if there's any way you can kind of keep them going, get them to do different jobs potentially.
The long-term cost of finding that talent again, or replacing them, or building up a relationship with them again, if you have to let them go for some reason, where they didn't think you have to, especially because people know about this government support, the 80%. The cost of that, actually, I don't mean in terms of pound, shilling, and pence. I mean time and effort, and energy is enormous.
Yeah. Absolutely. Let's have a look. We work in the leisure sector with the majority of our installations postponed. Therefore, our work in progress has shot up beyond our cash flow after we've paid our suppliers. Do you think Cbils would be applicable to cover us over the next few months, Mark?
Again, it boils down to the plan and what you can show and what comfort you can give the person that you want to write a check. I think hospitality is one of the hardest sectors to actually, just being brutal, to put together a plan that shows how you get to the other side. So again, go think about your, that's what I'm saying, think about your revenues, but if people can't walk into your restaurant, shop, whatever it is, hotel, then you haven't got any revenue. So think very hard about the cost base and can you mothball it. Yeah. And again, I'll come back to the point is this, and I think this is, you see these graphs of the hump of the kind of infections, and it's like a wave coming in. We don't know how tall that hump is. So right now, we don't know how long it's going to go on, how tall it's going to be. This is more about, the personal impact on people personally. But from an economic perspective, how tall is a hump? Once we can see over it, you can say, right, okay, so we've got it under control. This is what's going to happen. Things will start being turned back on. People will start moving around. The government's worked out a way of, keeping money in people's pockets or keeping people paid. So the whole economic wheel will start turning again, people spending money. And then you can then start to plan more accurately what your business is going to look like. It's not very hard to do. What your business is going to look like in terms of trading out of it. Right now, it's really hard to do. It's a bit finger in the air. And so just think about that in terms of, can you, what I'm trying to say is, can you absolutely mothball it?
Yeah.
For 1, 2, 3, 4, 5, 6 weeks to the point where, and this has been talking to suppliers. At the end of the day, right, let's just not beat around this. We talk about the coronavirus, the impact on people dying, businesses are going to die. So you've got to actually think about yourself and talk to your suppliers and your stakeholders, even employees to some extent. Unless you help me get through to this period where I can see over that hump and begin to plan for the world, the economy of the future, and even your market, if it might be a very local market, you can actually start to plan more efficiently and have more accurately. I'm going to go out of business. So if you want to get paid, you have to work with me on this. And everybody is having that conversation.
Yeah.
And normally, and I've been in many businesses, even my own businesses, it's a painful conversation to have, because you don't let people down. You don't want to accept the fact this is happening. It's ego sometimes, whatever it might be, or face, or your friend said, "I told you shouldn't have started a business." This is different. Everyone's in the same boat, so everyone's expecting these calls. So just make them and try and get your business over that hump, the other side of that crest, so you can see where things are going, and then maybe you can start to have conversations about how you fund it. Very, very difficult to model and build a plan around if you're just staring into fog.
Yeah, absolutely. And I think this one's going to apply to a lot of people as well. I'm a small creative agency servicing several FMCG brands under one company. I have premises as only myself as a headcount. My staff are all remote freelancers. What, if anything, can I claim help for? And I assume that's all coming out, Piers, over the next week or so.
Yeah, I think that's so is that a company or is it
a small creative agency under one company, servicing several brands.
Yeah. I mean, you probably apply, I don't know the exact details, but you probably, Cbils might be relevant.
Yeah.
You can show that you've got cash flow and your customers, and that you're talking to your customers and they're going to come back. Depends what sector your customers in. So if your customers are in defense, they're probably going to be buying cruise missiles going quite quickly. If they're in hospitality, it's going to be hard to sell. So it depends what sector you're actually serving in some ways.
Yeah.
But most of these things will apply to you. Obviously, it won't apply to you unless for your contractors if they're not PAYE. But the PAYE scheme may apply to you if you're paying yourself via PAYE.
And again, this one, I work for the Prince's Trust, who I know one of the exhibitors at the Festival of Enterprise, helping young people set up businesses. A lot of these young people are starting out on their business journey and therefore may not have a massive cash flow history. Will there be something to help these people that are new? I think it probably goes back to your previous point.
Well, there's been some talk that our fathers has got, because obviously quite a large sector is the third sector, so that's charities, foundations, things like that. And some of these are quite large organizations, and they rely on income. So in some ways it's a business. They probably aren't seeing much of that happening right now, depending on what they do, how they generate the income. Especially if the income is events and people shaking tins on the street, you can forget it, it's gone. And other charities, obviously, their income is actually donations as well. And if people are worried about paying the bills and the credit record or the mortgage or the rent, whatever it might be, they're not giving away money right now. So the third sector has got a big problem, because the third sector can't really raise equity, because it's all donations or the income they derive, and they typically can't borrow money. So I think there is a discussion going about that. I don't know the exact details. But again, if you're third sector, you've got to think, just be realistic again. Then there really is a case of trying to mothball it.
Pet food, Richard says, well, should always be a growth industry, surely.
Pet food, yeah. Well, people are still going to buy that. It's a question of getting it to them.
Exactly. Yeah. How well timed was that?
Speaking of pets, they've got a milk food. It's not really a pet, it's just a ball of fluff.
Yeah, exactly. I've seen that. Yeah. Similar to the last one, my business is about to turn 1 year old. Therefore, I have very little cash flow history. How can this affect me getting access to the loan? I think refer to the previous answer. Very informative. We're a UK limited company and we meet the eligibility requirement, but we are owned by an overseas company. Would that prevent us accessing the scheme? Good question.
Yeah, that was easy.
Yeah. Do you know what interest rate?
At the end of the day, so you understand that it's UK taxpayers' money going through British Business Bank to support the UK economy. So it's very clearly for UK-based businesses. It's not just done willy-nilly. It makes sense, doesn't it?
Yeah, it does. Anything else? We'll look to bring it to a close, guys. We've still got hundreds of people on here, but it's coming up to half.
So this does have to be the end. As I said before, if you can sign up to my YouTube channel, follow me on social media. I'm going to continue putting out content, and a lot of it's based on feedback and things that people ask me. So if you've got ideas, let me know, and I can share some views there. And a lot of these things, if you sign up to my course, which is free now, a lot of these conversations that I have with you on one-to-one on video, they're not particularly related to a bit of a cash flow crisis, but a lot of the issues and things you need to think about generally are covered in there.
Yeah, and just loads of thank yous on here from people for your advice, which is great to see.
There's one there about paying your debtors, can they enforce from Camille Din? Well, yeah, they can. You know, there's a lot of that going around in circles. You've got debtors, you've got creditors. So you think about talking to people, because in some cases they won't be able to pay you. But can they pay you less? Can they defer it? Just, you know, again, the key thing about crisis management is not just bury your head in the sand and hope it goes away, because it doesn't.
Yeah, I mean, I think a lot of what you said is, you know, massively applicable to a lot of the people here. Is that, you know, whatever you can do to get creative, whether that's stopping your startup before it actually starts up, or mothballing something and looking after those staff that you've invested in. And I understand for some people it's going to be incredibly difficult to do that, but nobody knows where the end is in sight for this, but we know it will pass. So it's just coming through out the other end in a strong position to take advantage of the opportunities that will be there.
Great, I hope that was helpful. A few tech issues there on the PowerPoint, but good luck.
Thanks, Piers. And for those that have asked, I've put it up a couple of times, but we will host this video on here on this platform, in this Crowdcast, and also on the Festival Enterprise website. And maybe if you've got the time, Piers, maybe you could come on again next week or the week after. As things
some of the schemes might have been clarified.
Yeah.
Especially what about self-employed, things like that.
Yeah, that'd be awesome.
Okay, thank you.
Thank you very much, everybody. Thanks for watching. Thanks for your time.